the mid 70s to mid 80s inflationary period in the US. If you look at the second half of that inflationary period, gold really caught fire and surged to the upside.
This week's special with Miles Franklin Precious Metal Investments. 1 ounce silver buffalo rounds for only $2.99 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Gareth Soloway from InTheMoneyStocks.com. Gareth, thank you so much for joining us today.
Thank you, Elijah, and Happy New Year.
Yeah, Happy New Year to you as well. Now, it seems like a pretty exciting year you're expecting for the metals. You're on record saying that we could see $3,000 gold in 2022. Your perspective on where we're headed?
Yeah, so I'm still in that camp on gold. To me, it's one of those scenarios where I'm mirroring the mid 70s to mid 80s inflationary period in the US. And I looked at the gold chart there, and we started out in that period where even when inflation was high, gold really did not respond. And it's almost exactly what's going on right now. Gold's not responding yet. But if you look at the second half of that inflationary period, gold really caught fire and surged to the upside. And again, if you look at kind of the way things have gone with cryptocurrency and the stock market, money has flowed into those assets as people have been chasing returns, and they have been going higher and higher. Well, if we're at a pivot point where the stock market may start to reverse and cryptocurrency has already seen a big fall, my guess is money is going to start heading into kind of the laggards, the value plays. And I look at gold as one of those value plays. So I'm still watching gold here. And if I show my chart here, I'll show you guys what I'm looking at. You still have a very defined kind of, trend line here connecting these highs. And that's still what I'm watching. If you can get a breakout above this line here on the GLD, and it looks to be around the 172 to 173 level on the GLD, I think you very quickly go up and retest the all-time high on gold on the GLD. That's around 193. At that point, you'll see some resistance, but I do think eventually it's going to break higher. As you see, just this inflation bug is not going to go away in the near term. And you can already see the Fed. I mean, we haven't talked about the Fed yet, but the Fed is already starting to panic, right? They're already tapering. They're talking about interest rate hikes. And now, as of the minutes yesterday, we saw them talking about, rolling off their balance sheet. So that's freaking the market out. And again, that's showing that the Fed is concerned quite a bit.
It's very interesting because I'm getting a lot of mixed perspectives on what we're going to see in 2022 for gold. Some people are not as bullish. If you wanted to boil it down for our viewers, what are maybe the top 3 reasons you're bullish on gold this year?
So number one is the bull flag on a technical basis. So if you look at the gold chart, we had that high that occurred kind of it was mid to late 2020. And that was a big surge up. I think on the gold chart, we had gone from something like $1,200 an ounce all the way over $2,000 an ounce. Since that period, you've seen a sideways to slight negative move that has lasted now basically a full year. That to me is a classic technical setup. It's called a bull flag, and you usually see those play out strongly with major moves to the upside. The second factor I would look at is basically the Federal Reserve and the government, right? So the Fed is talking a tough game. They're talking about how, they're going to get inflation under control. But if history has taught us anything, it's that as soon as, they'll start to get things under control. And as soon as we see a black swan event, something unexpected, the stock market tumbles by 25%, unemployment goes up, they only have one play in their playbook, and that's to make policy lenient again, to print more money so that the economy starts revving its engine again. That printing of money longer term especially is going to be very, very bullish for gold. And then I would just say also, you just have to look at the cycle. And I talked about that just before. If you look at kind of the higher inflation cycle from the 70s to 80s, this is the exact same playbook playing out.
No, we are seeing a somewhat aggressive Fed. As you mentioned, you said they're panicking, they're tapering, and they're thinking of possibly raising interest rates. The interesting thing is that a lot of people think this is bearish for gold because, they'll be tightening. But it seems like when we've seen this in the past, it seems to go back to what are the fundamentals? Why is the Fed doing that? And the reason is well, we're seeing inflation, which is bullish for gold. So it's very counterintuitive, but it's not, when the Fed tightens, it's not always bearish for gold. It can actually be bullish.
Yeah, and you're 100% right on that, right? So if you look at the last 20 years, we haven't seen inflation, right? So the only reason the Fed was tightening over the last 20 years was because the economy was strengthening, right? So they were trying to keep the economy from overheating, and that's why they were raising. So that's a negative for gold, right? But when you look at the last 20, 25 years, and you get into periods of inflation, when interest rates go up because inflation is surging. I mean, look at again, same thing, look at that kind of mid 70s to mid 80s level. I mean, interest rates were north of 10%. Yet gold had one of its biggest percentage moves in a very short amount of time. So the big question, and you're pointing to this 100%, is what is the cause of interest rates going up? It's not as simple as just interest rates up, gold down. It's what is causing interest rates to go up.
Definitely. And as for then silver, what is your take on what is going to happen for silver?
Yeah, so silver's a little trickier, right? Because you obviously have the metal exposure, which as the money gets printed, gold should be moving up. But the one factor I'm just always a little concerned about is, okay, well, if we see inflation going up, that's positive for silver. But what if the economy starts to slow? What if we get a situation where you have stagflation? And then the question is, how does the industrial side of silver handle that kind of slower economy? So, I mean, that's always a question in my mind. It's one of the reasons why I'm having a harder time project silver's target for 2022 and 2023. But the one thing we can do is just quickly go to the charts here, and there are some levels for us to follow. So number one, you have the same sort of major move on silver here with choppy 1-year consolidation, right? And this is bullish. I mean, this on silver is bullish. So the question I have is, you can see this lower trend line. We keep on attacking it. If that breaks, you could see near-term downside on silver to about $19.45 to 50 cents. But ultimately, again, if you look at that longer-term picture, the industrial side will fix itself. Eventually, the economy will recover. And if there's more dollars in the system, then you should be longer-term bullish on silver. So I do think silver is going to perform. It's just a little harder to know in the near term based on how the economy is doing for me. The gold picture to me is very one-dimensional, where it's just, it's basically the more dollars printed, gold generally goes up, especially if the dollar starts to decline, which it will at some point. Silver has those dual kind of actions to it, the money printing, but then also the industrial side. So I think longer term, it all goes up. But the question is, in the very short term, does silver have a little bit more trouble versus gold?
Now, as for cryptocurrencies, we've been seeing kind of a choppy market there, up and down recently for Bitcoin. Your perspective on where that is heading in 2022?
Yeah, so I think even last time I was on, I was somewhat on the bearish side on cryptocurrency. I still remember when we were hitting October highs, all-time highs, I wasn't buying the breakout above April highs. And in all fairness, I just was seeing selling by, you could just see how the chart was acting. It wasn't a healthy chart. There was too much hype in this small investor camp, which is never a good sign for an asset that's going to continue to go up. And what we've seen recently is a pretty successful break lower on Bitcoin, right? So just in the last 24 hours, Bitcoin broke out of a very tight range here. Check this out. This was so cool to see. So you had this resistance, which was clearly at 52,000. You hit it here, and here. And then you had this lower band, which was right around 45,800. And notice how we kept on hitting on it. And finally, we broke down. Now, you have this little low right here, which was, I think, about a month ago. We had that big flush in the overnight on Bitcoin. But that's actually not the most important thing I'm seeing here. What I'm really watching is there's a secondary trend line, which makes up a head and shoulder neckline. And look at this, folks. So right there, connecting this low to this low, and it gives you this low right here. Now, the reason why this is so important is that a head and shoulder pattern is a pattern that is bearish, okay? And if it actually breaks this neckline, if you start trading below, you can calculate the approximate downside target by taking the highest point of the head and shoulders, dropping a plumb line down there. That distance is what this distance will be to the downside. What's so crazy about that is that if it did play out, and again, head and shoulders, they're slightly better than 50% in terms of playing out, but they're not amazing. But if it does play out, Bitcoin has about a $17,000 target on it, and that should be achieved in anywhere between 6 and 12 months per last cycle. So if you look at cycles like 2017, when did we bottom out in Bitcoin, or 2013, it usually took about 6 to 12 months following the major all-time high at that time for it to bottom out. So, I mean, there's just so much going on in the crypto market here that you have to be just fascinated. And for me, I'm trading it as a swing trader, but I'm certainly waiting patiently, as I do expect it to go lower, to buy longer term hold positions. And again, I do believe Bitcoin's going to 100,000. I think it's even going to 250 and maybe 500,000, but it has to have that .com moment, right? So if you look at the .coms, it's almost picture perfect. A lot of people aren't old enough to remember this, but it was my beginning of my trading career. The .coms, they were so much junk companies with a few great companies mixed in, like Amazon. But eventually, all these stocks went up thousands of percentage points, even though they were run out of their parents' basement, made no revenue, no profits. And then we finally had that washout. 95% of them went away. The ones that survived were the mega winners, like Amazon. I mean, Amazon went from, I think in 2000, it was around a $75, $80 stock. It went down to $5 in the .com collapse. And where is it now, right? It's around $3,500, $3,300 a share. So it will bring huge opportunities, but I do think investors have to be careful here because, again, you have to have that flush out moment.
For investors looking to just get involved in cryptocurrencies, if they don't have any, would now be a good time to start dollar cost averaging, or really wait out for that washout moment?
Yeah, so I think the beautiful thing about it is you're already down from 69,000 to 43,000. So I think if you're someone who says, all right, listen, I'm going to put 100 or 500 or $1,000 in every single month, and I'm going to be committed to doing that, you know what? There's nothing wrong with starting that here, right? Just on the off chance I'm wrong, which I've been wrong before, you at least have some skin in the game. But I love that idea with something like Bitcoin or Ether, where you're dollar cost averaging. So if we do go into that winter where, Bitcoin, let's say, hovers around 20,000 for 6 months, you're getting lots of entries of small positions there to bring your overall average down, especially with the long-term views that I have that see it going much, much higher over the longer term.
Now, as for the stock market, I'm also getting different perspectives from a lot of our guests. Some people are thinking we're going to see really a blow-off top moment, a melt-up in the stock market before a crash. Other people are saying, no, we've already seen that, and we're headed lower this year. We're headed for a crash this year. Your perspective on where we are right now?
Yeah, so I mean, for me, I'm not sure if I'm in the crash camp where we see like 30 or 40% downside in the stock market. What I do think is we will at least have a 20% correction in 2022, maybe more. But again, if you think about it logically, right? So if you look at the stock market, and this is the chart of the S&P 500 of the spiders, and you can see we've been trading in this channel, right? So basically going back, here's your COVID dip right here. All right. And what happened right around this time? The Federal Reserve comes out and says, hey, we are going to print and push $120 billion into the system every single month. That equates to $1.5 trillion a year. And in addition, we're going to keep interest rates at zero. And additionally, we're going to expand our balance sheet. And then the U.S. government is going to come out and print lots of money and send the Americans checks, right? We're going to send all the Americans, or at least the ones that qualify, multiple checks. So again, does it make sense that we had this amazing kind of liquidity expansion that drove the S&P up? It absolutely does. Well, on that same front, you have to be able to be objective and say, okay, the Fed is now telling us that they're taking some of this away. All right. The government is now, you're even seeing the inability for Biden to pass his Build Back Better plan. So that's not extra money going into the system. So you're seeing this situation where it's almost like a little bit of an unwind. And it only makes sense to me to see the stock market, which has been driven by that, unwind as well. So I'm in the camp that at some point, we very clear channel here. At some point, we do break below the channel. And then I think, again, my guess is your downside target for 2022 is this line right here, which was your pre-COVID high. And I would guess that, again, we would trade down there. And that's, I think that's around 20, maybe about 25% to the downside from current levels here on the chart.
So it does seem like, quite a big crash based on what we've seen in the last couple of years.
Yeah, I do think so. I do think so. Again, it's not going to be kind of the 2008, 2009 65% drop, but I do think that again, especially if inflation is not going away and the Federal Reserve is being more forced to kind of take this stimulus away faster and faster, I do think that that's a good possibility. I also think that, you're already seeing it in certain stocks. Like, I mean, it's been absolutely remarkable as a trader and a swing trader to see some of the drops that we've seen on stocks. Like, I just got to show you guys some of these charts. So, I mean, some of these high flyers like Cloudflare, this stock was one of the biggest runners in most of 2021. And just in the last month, it's gone from $225 down to $100. I mean, that's an incredible reduction of its market cap. And same thing with SE. Here you had one of this most amazing runs to the upside. And then again, it goes from $375 to a low today of 180 in basically 1 month period. So a lot of the market to me is already in a bear market. Again, you could go to other stocks too. I mean, we know what Peloton, right? I mean, Peloton speaks for itself, what that stock's done. But so many, I would say like 70% or maybe 60 to 70% of the stock market is already in a bear market. And you're now seeing Apple, Microsoft, I mean, the big players that make up 50% of the NASDAQ 100, the S&P 500, they're the only reason we haven't seen a bigger correction in the stock market. So again, I would say this, the underlying factors in the stock market are very weak right now. We're being carried up by a matter of a handful of stocks that cannot last. So at some point, Apple, and we've even seen Microsoft recently start to take a little bit of a tumble. But if those stocks start to go, the S&P and the NASDAQ will see a big, big decline.
Before I let you go, I did want to touch on the precious metal markets today. We're seeing quite a bit of a drop in silver. I mean, silver, to the low 22 level. Your perspective on the current drop we're seeing right now, and it doesn't seem like this means anything long term. Is that right?
Yeah, I would say that's correct. But basically, yeah, I mean, I'm in that camp where it's a big drop. But again, the technicals are telling me that this is the important line right now, which is on silver. I guess that's right around just below $22 per ounce on silver. So even though we're having a big drop on a technical basis, as long as this line holds, that's okay. Now, if this line breaks, then there's a very defined secondary line here just below $20, around $19.50, that would be interesting as a buying opportunity. And that's kind of, believe it or not, that's where I'm actually looking to buy silver. So I have exposure in gold. I have some gold miners. I have some GDX, some GLD. I have physical gold. I do have some physical silver, but I haven't really gone into the swing trading side on silver yet, as I'm more waiting for the level, that 1950 on silver to hit. But yeah, again, the key is, as big as a drop as you're seeing in gold and silver, unless it breaks key levels, you don't have to worry too much about it in the near term.
All right. Well, Gareth Soloway, we really appreciate your time today. Any last thoughts before we let you go? And where can our viewers find you online?
Yeah, so last thought is I do think 2022 is going to be a very volatile year. The Fed capped volatility based on the fact that they were pumping so much money. They were always the backstop for this market. So every sort of dip was a buying opportunity. I would caution people from assuming that's going to continue as they're removing money from the system. And lastly, you can follow me on Twitter. That's a great place, at Gareth Soloway. If you're interested in crypto, verifiedinvestingcrypto.com, and for stocks, inthemoneystocks.com.
Gareth, once again, thank you so much for your time, and God bless.
Thank you. You too. Take care, Elijah.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price, with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.